Hey soldiers, in the month of June 2022, all of the central banks made a very interesting move with regard to gold. We're going to talk about what they did and why they did it. We're also going to hear from one of the preeminent gold investors, Rick Rule, and we're going to see what he has to say with regard to what's going on in the gold market and whether or not you should even consider making it a part of your portfolio. Does it have a place? Well, we'll, do a little talking about the issue, and maybe that can be the start of your due diligence to find out. Now, we're taking a hell of a risk with this video because A, we're releasing it on a Friday, and typically our videos don't do well on a Friday. B, we're talking about gold, and for some reason, gold does not, or has not historically, done very well, has not been very popular on this channel, but we're going to talk about it anyway because you need to understand why these things are happening, and you need to understand all of the asset classes that are out there.
But listen up now, this is serious.
Okay, central banks added 59 tons of gold in the month of June 2022. We had Iraq as the largest purchaser, the Bank of Iraq, the Central Bank of Iraq, added 34 tons to its gold reserves. Turkey also added, Kazakhstan, and India as well. They're all regular buyers, and they continued that trend in June. Now, here's what they all did or did not do. None of the central banks sold any gold in the month of June, which, as you can see from the chart, it's been a little different story here throughout the year. We've had some sales. They have, been decreasing, but in June, nobody decided to sell. Now, why could this be? Well, one of the reasons is because there's a lot of financial instability in the world today, and the central banks understand, despite what Warren Buffett says. Warren Buffett is an amazing investor, but he is not omniscient. He is not right all the time. And Warren Buffett can be challenged in his thought process, okay? Gold is something that is purchased by the central banks because gold maintains its value. It has been doing a fine job of that for literally thousands of years. So what we need to do is develop a different type of viewpoint on gold. And I'm going to give you a way to think about it here in a minute. But you must understand that gold is a store of value. All right. So you're not going to see gold make the type of moves that you might see a growth stock make. Okay. It's not designed to do that. It's designed to hold on to its wealth and help you stay in front of inflation. Now, gold, over the years, it has done a great job of that. All right. As you can see from this chart, gold has stood the test of time over the past 22 years. Now, mind you, I will tell you that this chart does not account for dividends. Okay, you can go out there and invest in a stock and get paid some dividends, and that will, of course, change this equation, but gold has done well. So it's not like gold is out there that's going to be the next Google for you, but gold is certainly going to do its job, and as we can see, it has done a fair job of holding on to its value over the last 22 years. And I use that period because it's contemporary. Most of us have been alive for that long. We can absorb that and process that easier than we can the old adage about gold being able to purchase a tunic, a belt, and some sandals back in Roman times, and being able to pretty much do the same thing with a suit, a belt, and some handmade shoes today in our world. We're talking about men's clothing. Ladies, you all usually don't pay as much for clothing. So yes, we are talking about men's clothes. So that is how gold has literally stacked up in terms of its comparison in return with some other asset classes. Now, of course, in the modern era, we tend to associate gold's value with the dollar, okay? Because when we look at charts and we understand that gold is either up or down, it's $1,700 or it's $2,000, we automatically kind of are programmed to think of it in those terms. But what we should do is kind of adjust our thinking a little bit. Imagine, if you will, a lighthouse. We'll say the lighthouse is representative of gold. Now, gold is stable, all right? It is the dollar, the fiat currency, in this case, the world reserve currency, that is the fluctuating variable in this equation. All right, so you've got gold, which is stable. But when the dollar loses value in an inflationary environment, such as the one that we're in now, of course, it's going to require more dollars to purchase that same ounce of gold. So gold's going to look like it's worth more of those dollars, okay, because the value of the dollar is going to be down here. Now, gold remains stable. So when those inflationary times ease up and the dollar gets stronger and we see it up here, then, of course, and this is kind of what the Fed is trying to make happen with raising the interest rates, is trying to cool down inflation. So when inflation cools down and the dollar becomes a little bit stronger, then, even though gold's stable, now it is worth less in relation to the dollar. But gold hasn't moved. The dollar has, okay? That's what we need to do in terms of thinking about gold. It doesn't move. The dollar is the odd man out in that scenario. So another way to think of this is, for example, during this whole thing with the back and forth and the sanctions with Russia, a barrel of oil went up from 936 milligrams of gold to 1,659 milligrams of gold. If we price that thing in gold and we use the fluctuating item, in this case the oil, in relation to the stable item of gold. So I just want to kind of put that bug in your ear and have you think about it a little differently, because I think that can help you in terms of doing enough due diligence to figure out whether or not, or add to your due diligence, figure out whether or not gold is an appropriate investment in some way, shape, or form. And we'll talk about how you can make those kinds of investments in just a second here. Let's hear from Rick Rule.
And I know that you have told us many times in the past that you probably don't want to see a world where the gold price is super high. But I did want to ask you about the circumstances behind the lower gold price right now, just so people can understand that.
Well, Charlotte, you said a lot of things there.
Yes.
The first is that human nature is such that price levels justify narrative. So when the gold price is high, people believe in gold. That's ironic. When the gold price is low is when people are supposed to believe in gold. So the first thing that I've noticed as a sort of a specialist investor is that when my investment expertise is the most in demand, it has the least value. And when my investment expertise is of the most value, it's the least in demand. That's just the way the world works, which is all fine. The fact that people are disinterested in gold and disinterested in resources, I think is a wonderful thing because they're on sale. Now, my experience has been that the most important determinant of the gold price is the strength or weakness in the US dollar and real interest rates. When real interest rates or higher nominal interest rates drive the US dollar, gold does poorly. A circumstance like this, where the US dollar is very strong and gold is relatively strong, has only happened twice before in my career. And that's been very bullish for gold. My friend Doug Casey, and I think I've quoted this on your show before, my friend Doug Casey describes the US dollar as the worst currency in the world with the sole exception of everything else.
Now, right now, gold is down off of its highs. We saw it peak up around the $2,000 range earlier in the year. Of course, it popped up into that rarefied air during the crisis that we had in 2020. Rick Rule is quoted as saying the fact that people are disinterested in gold and disinterested in resources, I think is a wonderful thing because they're on sale. And he's absolutely right. Gold right now is, in relation to the dollar, is not as expensive as it has been. Now, let's talk about some ways and give you some information to include gold if you choose to do that. I'm certainly not telling you to buy gold. I'm not telling you to sell it if you have it. But one way to own gold is, of course, you could own it physically. I would caution you that owning gold physically carries some risk. Let's say that there are floods down in Kentucky right now. And if you're in a situation where you've got it in your actual house, you could be looking at a situation where, you could lose it. Okay, flood, fire, things like that. Of course, I do hope those things never occur with you, but you've got to prepare for eventualities, right? Another thing you could do is they have actual services that will allow you to lease your gold. Lease it to jewelry manufacturers, industrial manufacturers that have a need for the metal. You just got to Google this, but this is another way that you can actually put your gold to work for you, and maybe it can actually have some returns over and above what you would normally see from it, because of course there will be a premium involved anytime you are leasing out something you own. So look into that, leasing gold. All you got to do is Google it. Now, other ways that you can own gold or have an interest in gold: mining stocks. There are several out there. I will mention one. I don't own it. I'm not telling you to buy it. Barrick. The only reason I mention Barrick is because Warren Buffett once owned shares in Barrick Gold. That's a play on it, the mining stocks. I would be very careful about so-called paper gold, because there is some speculation right now as to whether or not the paper gold dealers have enough actual gold to back up, everything they say that, is denominated in these paper assets, like these different funds. Okay. So those are different ways that you can go out and research gold. Of course, if you go and buy gold jewelry, like Mr. T, he had a lot of gold jewelry back in the 80s. Remember, gold jewelry has a premium on it. So you gotta, it's not certain if you can get that premium back if you need to sell it. Okay. It may just be offered up at the price for whatever gold is trading at for the ounce. I'll also tell you that 14 karat is one value, 24 karat is quite another. So as the carat weight goes up, the value goes up. One thing I want to leave you guys with is Michael Nowak, the former top JP Morgan gold trader, has been convicted of a gold spoofing fraud. Now, this was some manipulation in the gold market. There's a lot of speculation that there's a lot of manipulation in the gold market. And this is why some people choose to have some sort of physical interest in gold, because even though there's manipulation in the price, they do have some sort of insulation from a lot of the shenanigans that might be played out there, like this guy from JP Morgan, big bank, manipulating the price of gold. So there you have it. All right, take a look at this video. It's very important. You want to share it with your friends and family, because a lot of people could be facing some serious economic difficulties if they don't understand what's going on in the consumer credit market. Because Americans are making less money, yes, they're making less money. We'll show that to you in a different video. Americans making less money, inflation is up, taxes are up, thanks to the Inflation Reduction Act, and of course they're raising interest rates. So the American public has a lot of pressure on it. Credit cards and high interest credit debt are another one of those pressures that could conspire to rob you of your wealth. Now, you got to be very smart in terms of how you navigate these waters. Watch this video, give you a lot more information about what's going on. And guys, I will talk to you soon.